That is the Fed chair, Kevin Warsh, expanding on some of the principles at the Fed that he's already hinted about, but most importantly in his speech there, about 25 minutes, saying that although some of the inflation readings this summer have gotten better, quote, they do not tell me that underlying trends have meaningfully improved. More concerned about price stability than jobs. Hard-pressed, he says, to say that financial conditions are restrictive. Two-year does bounce to 4.32. That's the highest since July. 10-year also bounces a bit to 4.7. Let's bring in former Fed Governor Randy Kroszner and our Steve Liesman. Steve, some initial thoughts from you.
Well, I'm going to say that it seems like Kevin Warsh met his critics halfway here. And by that, I mean, let me just set the stage here. He was criticized for not providing his reaction function, how he would react to data that came in. I'm going to say here now, Carl, my initial reaction to the speech is he provided the functions, though he refused to still provide the reactions. And by that, I mean, he gave us a whole series of data points that we hadn't heard before, things he's looking at. PDFP, private domestic final purchases. He's looking at credit spreads. He's looking at the second derivative of change of earnings. And he's giving us his assessments of those in the current economy. He didn't tell us how he would react to those things, but he gave us some pretty strong hints. Says we have work to do if we're not confident inflation is moving to target. He said inflation is responsibility of the central bank. Recent readings do not tell me underlying inflation has meaningfully improved, and he committed to that 2% target. On the economy, said it was in good shape generally, bullish on AI, and stuck to his guns about providing forward guidance. But, in the terms of what we're learning how to listen to Kevin Warsh, I think we've gotten more. There's a basis to go on here. So I'll just conclude and say it again. We got the function, but not the reaction.
True, Steve, although I would point to a couple of other things there, which may also have been somewhat in reaction to his prior comments. One, just asserting very, very firmly that 2% on the headline PCE is the Fed's inflation target and will remain there, and that the policy rate is the key instrument to try and use to get it there. Those two things he allowed to kind of have a little bit of haze around the last time. And, it seems as if even though he did talk about all this CapEx and maybe it leads to productivity down the road, he didn't lean on it for trying to suggest what the next moves might be in policy.
No, I agree with that. And Mike, it's worth to point out the market reaction here. My takeaway was his overall a hawkish speech in the terms that we can expect. Hawkish reaction from Kevin Warsh. But if you look at what's happened now, I'm looking at the September probability of a rate hike is now 56%. And I believe it was 30 or 35 before the speech. I am seeing now a December probability of 86%. So this was taken as a hawkish speech, and now we know maybe better how to listen to Kevin Warsh and his ideas about being firm on the 2% target, being firm that inflation is the Fed's responsibility, being firm, as you say, Mike, that the short rate is the main instrument for getting there. The market is taking this as hawkish, and I think it may be the right call here.
Randy, you in the same boat?
I think the key thing was that he was very explicit that the interest rate would be the main policy instrument to battle inflation. That was one of the issues that he seemed to not be very clear about before and had caused a lot of consternation in the markets. He's now very clear about what the instrument is. So I agree with that's one of the key changes. And he didn't say exactly how he would use it, but he said that's what he's going to use. I think he's been talking about the 2% target and, saying the Fed's committed to that and he's committed to that. I'm not sure that's the news, but he made it very clear that he said it's the PCE, the traditional thing that the Fed has used. There have been some questions about, well, maybe he would keep 2%, but change how you measure inflation, because that's one of the task forces. So he seemed to commit to saying to that. And so I think those are kind of the two main headlines. He went through all the questions that the different task forces are going to look at, so he wouldn't prejudge any of that. But I think it's, I think it'll help to calm people that he's got a plan, he's got a structure, he's got sensible principles, and monetarism is back. Money is going to be the main or one of the key things he's looking at.
That was I thought that was personally interesting. Money matters, as he said. Do we need to start watching M2 more closely? Steve, you got us?
Yeah, I got you. Oh, sorry, no, that was for me. Look, he talked about that in one of his hearings. I want to say that he said he was going to bring back M2. It's well to remember it was Greenspan who killed M2. So there's a lot of debate about whether there's any value to that. But if you don't mind, Carl, I'd like to pick up on what Randy said, because I made a list of the indicators that Warsh flagged in his speech, the kind of function stuff. So I'm going to, obviously, PCE inflation, looking at both the 12-month and 6-month. He brought up PDFP, which is private domestic final purchases. That's a way of looking at underlying demand in the private sector. It takes out a trade, it takes out inventory, takes out government spending. He talked about credit spreads of both leveraged loans and corporate bonds. Talked about the second derivative of growth in earnings. And the inflation breath, I thought, was an important one. We've heard other Fed people mention this idea of what percent of the basket is above 3%. What's really helpful about that, and what really addresses one of the things that the critics were saying about Warsh, is we didn't have a way of measuring what he was thinking. We didn't know what he was thinking about. And this, to me, I guess as the Fed wonk that I am, give me pieces to kind of plug in here. I don't know what he's going to do. He's not going to tell us what he's going to do. But it allows me to say, okay, these things are important to Kevin Warsh, and this is the way these things are moving. Like I said, that's the function, and you got to plug in your reaction. He doesn't want to give it. He wants that pure or unfiltered look from the markets. Well, the market's going to try to figure out what Kevin Warsh is going to do, and now we have some pieces of the puzzle to work with.